You kind of called this last November, so we got to give you kudos for that. Worse than you could have even expected. However, we've seen these shares lose about half of its value just this year alone. Do you think we're seeing the bottom now? How far does this extend?
It's funny. There's a quote by a basketball player named Michael Ray Richardson. When the Knicks were losing, someone said, to your question, where is this going? He said, the ship would be sinking and the sky is the limit. And we think that a lot here. The problem you have is that there's no valuation support at all, right? The company is locked in a battle with 3 or 4 major, competitors, and they have to spend in order to try to win. So I don't see valuation support here. So we try to put a price target of about $100 on it. But the reality is their guide on revenues looks really optimistic. And if they miss again on revenues, given the cost growth, you can keep falling. So the sky's the limit.
Or the bottom's the limit. Michael,
exactly.
When you think about a Roku, though, there has been chatter, especially when you see this kind of value wiped out, that it could be an acquisition target. And I wonder, you say that it's in such a competitive space. It's very true. What is the technology that Roku has that you think maybe a potential acquirer would want?
Well, I think there are 2 things, right? So their operating system is good. We enjoy our Roku TV sets. They actually work really well, almost better than the ones we have from Samsung. So I hate to say that, but it's true in terms of Samsung users. And then the second thing is they have the Roku channel. So they have an emerging AVOD business that's valuable. The problem you have is that the natural buyers, the Amazon, Apple, Alphabet, they can't buy Roku. There's too much antitrust. The media companies that we cover have all been slaughtered by their pivot to DTC. Look at Viacom stock price this week. Look at where Discovery is. They can't buy them. It has to be either a television manufacturer, maybe like a Samsung. And then Craig and I, Moffett and I were saying, maybe a Comcast, but Comcast would get really hurt as well if they bought this. So there's a very limited number of places where you can get M&A. Maybe it would be a television OEM that wants to accelerate their pivot to connected TVs. That's probably your best shot. Right. And the question is, can they do it themselves? Right. So I guess I made a knocking reference on Samsung's interface. Well, maybe with time and better engineers, they could fix that. So the question is, how much of a moat does Roku have? And is it worth buying them at this level or just waiting it out for the stock to fall further or to hire people from Roku to do the job?
Yeah, you spell this out pretty clearly in your note today. You say, as such, the stock will likely be orphaned until earnings revisions turn positive. And given the outlook here, that feels like a long time from now. What could a long time look like?
Well, Carl, that's to your questioning of the previous guest about what do you buy here? Our view is in a rising rate environment, the only thing that works is earnings revisions surprising positively. Having a company beat in earnings and getting better. I think the question that we raise is, look, they've guided to 35% revenue growth for the year, 25% revenue growth in the first quarter. Everyone's scared about the macro. Everyone's scared about the second quarter compares. I think, if they miss on their revenue number and the optimism of 35%, you'll have negative revisions for the next 2 or 3 quarters, right? So I think, to me, it's really about getting the revenue number right. Now that they've really killed our profitability, is getting revenues right, and then revenues we will be tracking advertising growth, SVOD ads. I mean, we have a pretty good way to track this, so give us some time, we'll come back to you. But I think, to me, it's that 35% revenue guide is, I think, fraught with risk, and that's how we see it.